Hej och varmt välkomna till årets första live-Q här på Redeye. Dagens bolag som ska presentera sin bokslutskommuniké är Formpipe Software med vd Christian Sundin. Varsågod.
Tack Erik, thank you, and I will hold this presentation in English. So welcome everyone. I'm, as Eric said, Christian Sundin. I'm the CEO of Formpipe, and the webcast today we will cover the Q4 report and also the full year results for 2020. But I'm even more excited for the next agenda item, which is presenting our strategy for growth and to give my flavor on the financial targets that we published with the report this morning. So 2 sections, and I will jump right into it. First of all, a few highlights from 2020. An odd year for many of us, or all of us, I would say. And I'm very proud of the adaptability we have proven during this challenging year. The team of Formpipe, everyone in the Formpipe team adapted really swiftly and made sure that our customer continued to have their support, even though we had to swiftly work from home instead from at our customers and so forth. We were well prepared. We had the tools, we had the processes in place, and could adopt. But not only us, also our customers and partners has provided a lot of co-creation during this year. Our customers working remotely, many of them through Microsoft Teams, and a lot of the information created in Microsoft Teams and those communications need to be stored and managed in a professional way. So we, our partner Microsoft, and a few customers, we actually started an R&D process of building an integration to our core systems of case and document management to integrate with Teams, and found actually extra use and digitalization for our customers in with that initiative. So everyone has pitched in during this difficult year, and that also applies for our shareholders via the board. It would be a natural thing to just hit the brakes when things happen as the pandemic situation, and just stop all long-term initiatives and just await the pandemic to end. Our board and our shareholders has endorsed us to do the exact opposite, to strengthen ourselves, to invest in future growth and think long term. See if there's talent that we can find now that has tougher to that we have tougher to find in normal terms than during this period. So I'm very happy with that and how we have managed the pandemic so far. We also made an acquisition during 2020. We bought a company in UK, a former partner, EFS Technology. We acquired thereby a software for add-on sales to our customer base, is mainly for the customer base close to Lasernet. And we also, more importantly, we got about 30 very skilled employees aboard Formpipe, and that we, on a distance, has integrated to Formpipe and our culture very successfully. I'm really happy to have those guys aboard, and I hope and I believe they really think it's a good thing to join the Formpipe club. And then I wouldn't be me if I wouldn't highlight the fact that we have continued to grow the recurring revenue and thereby accomplished an even better revenue mix than a year ago. Recurring revenue, I will repeat it many times during the coming 20 minutes, and this will not be an exception. So digging into the numbers, I will not go into all of the details here, but we can see that, as I already pointed out, recurring revenue is growing, and for the quarter 65% of the total revenue, for the full year 63% of the total revenue, coming from 1 year ago on 58% of the total revenue. So a growth year on year on 10% of recurring revenue. I think that's a strong number. On top line, in line with our strategy, the growth should come from recurring revenue, so a modest top line growth, while the delivery revenue and the one-off traditional license revenue is continued to decline. In the light of the pandemic situation and that we actually are positioning us for growth and taking investment in that already in 2020, to then improve the EBIT margin and the EBIT to 53 million is, I think, a fair result in the given circumstances. And we have an improved EPS for the year as well. In the light of that, we have strong cash flow, solid recurring revenue, and a solid business model, and solid finances. The board proposes the AGM to increase the dividend with 10%, summing up to 0.66 Swedish krona per share. Going into some more details on Q4. I already mentioned the strength in revenue mix and the year-on-year growth quarter by quarter on 14%, made up by both growth in software as a service and support and maintenance. The support and maintenance growth is helped by the acquired support and maintenance growth from the acquisition of EFS. The non-recurring revenue, as pointed out, are continue to decrease in line with our strategy and is down 18% from last year. All summing up to that the total revenues are for the Q4 year-on-year are flat, however, with a much better revenue mix than a year ago. We are gearing up, and gearing up costs money and drives cost. However, the acquisition of EFS, a former partner that had kickback on our sales of Lasernet, that actually provides a relief of cost, where this sales expenses are going down because we're not giving ourselves kickbacks. It's in the salary cost of our employees instead. We do increase speed and initiatives on product development. We are building new add-on modules for our products to sell to existing and new customers. We have recruited people in the US to meet up with the market demand there, and we have, of course, taken aboard all the people from the EFS acquisition in UK, and that increases the staff cost line in our results. And it's all to boost and drive the future growth of mainly Lasernet that we are making these investments. So all in all, quarter by quarter, Q4 by Q4, we're down on EBIT slightly. We are continuing to see the rapid shift towards SaaS sales. I will come back to that many times, and it's quite an impressive journey we're on, coming from 10 million to now having an ARR going out of 2020 of 58.5 million. Rapid shift towards SaaS revenue instead of traditional revenue. But actually, the ACV in Q4 is even stronger than what first meets the eye. Due to the currency fluctuation, or actually the Swedish krona been strengthened compared to almost every other currency in the world during Q4. In order to get the right ARR going into 2021, we felt that we needed to revalue the entire contract portfolio of all our contracts to the current exchange rates rather than to the exchange rate those contracts were once in a while signed to. And since we have approximately 80% of our SaaS recurring revenue, SaaS contracts in foreign currency, this will swing from quarter to quarter, and we'll from now on disclose the currency effects on the ACV every quarter. So actually, the ACV was 4.4 million in Q4, and that is a strong number also in historical terms. Summing this all up, I think I've touched base on most of these things. However, looking on the top line here, net sales, it's quite a modest growth over quite a lot of years, from 307 to 403 from 2014. But I want you to really pay attention to the next line. Our strategy has been to do two things: grow recurring revenue, increase margins. That is what our strategy has been about up to 2020. Looking on that, coming from 140 to 253 in recurring revenue over this period, also in combination by taking out top line growth and still improve margins from at the low end on 2015 on 6% coming to 13%. We've been able to combine these two parameters in a balanced way and drive this growth of recurring revenue. Leading me into the next topic for today, the strategy for growth, I would like to use the positive trend of Lasernet as a segue. And deep down a little bit on under the radar how Lasernet in the private sector has grown quite swiftly over the year and previously year. We have now seen evidence that the ramping up with the acquisition of UK and the people in US, that is paying off. And looking on Q4, you can see the SaaS ACV for Lasernet, that's 4.3. That is actually 4.3 out of the 4.4 for Formpipe I just mentioned. So Lasernet is really the spear here, bringing us to growth, and it's paying off. And looking on the lower graph here, we see the full year effect on recurring revenue for Lasernet. This graph then actually also then includes maintenance, not only SaaS. And then you see coming into the year with a little bit about 56 million. Then a lot of the growth in maintenance, the first purple bar there, that is to a large extent acquired maintenance of Lasernet, since EFS was selling Lasernet and they had Lasernet maintenance, of course, maintenance revenue. But we also add on the SaaS Lasernet recurring revenue here. And now we are on almost 75 million in ARR on Lasernet alone. And then Autoform that we acquired is not in these numbers. So and bundling Lasernet with Autoform going forward will be an even stronger offering. There is clearly evidence for the market possibilities for Lasernet and Autoform via our partner network here. And with that said, that leads me in to why we today have announced a strategy for growth, and that we're entering a new era in Formpipe. I will come back to the financial targets at the end of this, but we will focus on accelerating growth in US and in Europe. We are investing heavily in sales and delivery capacity to support our partner network that will drive sales of Lasernet and Autoform. We have, as pointed out already, we have a high share of recurring revenue. We will continue to drive that. That's where we focus on our growth even going forward, to drive SaaS sales, software as a service. But we will drive this growth journey with organic growth. But we will still continue to look for complementary strategic acquisition to drive this growth even better. One step back is that to say, I just mentioned that we have a strong and stable base of recurring revenue, making us having faith in going for this investment journey and this growth journey. We have a loyal customer base, and we have been growing our recurring revenue in line with our strategy with more than 10% per year over numerous years right now. So that sets the stable foundation for us to take this leap. The market is clearly there. It's a $11 billion market according to Gartner, and it's a growing market. The content services market is growing by 10% according to Gartner as well the coming year, and more importantly so, the transition that we see from traditional license to SaaS is very, very clear. Gartner predicts that in 2024, 60% of all software sales will be software as a service. That really suits us well, and our growth, the growth journey that we're on. We have grown our SaaS for Lasernet on 55% from 2017 per year to 2020. Formpipe is standing on two pillars. It's the public sector and it's the private sector. The public sector, we've been market leader for many years in Sweden and Denmark, and we will continue to drive digitalization of the society and help our customers on their digitalization journey. That will be a profitable a growth journey in itself. However, the growth will be even more apparent in the private sector and with Lasernet as the front runner for that growth. We are selling Lasernet as an add-on to the ERP system Microsoft Dynamics. Microsoft Dynamics is gaining market share and is growing rapidly. We will get on their journey. We will tag on to the successful journey of Microsoft Dynamics, especially in the cloud, Microsoft Dynamics 365. The same thing applies for Temenos. Temenos is an upcoming, they're a global player for bank and finance systems. With the acquisition of VFS, we got a much closer relationship with Temenos. Temenos is gaining market share on the bank and finance system sector over the world, and we will tag along with the Temenos partner network and their success journey with Lasernet and Autoform as a complement to the Temenos business systems. Going back again on Lasernet, and some historical number. We see that we have quite a strong growth of Lasernet altogether, not only in SaaS sales. We have grown with more than 12% in average annually since 2016 of Lasernet. And we will continue to grow that. And as I said, we will focus our efforts on Microsoft Dynamics 365 and the Temenos partner network. And what we will make as an investment in 2021 is to add on more capacity to support the partner network around the globe even better, making sure that they put Lasernet and Autoform into every deal, not just every 5th or 10th deal that they see. We should be there, and we should be part of every deal our partners doing on the ERP space with Microsoft and Temenos. So what is Lasernet then? It's an add-on product. It really simplifies document management on our ERP system. Actually, any ERP system, SAP, Oracle, BAN, you name it. But we put our focus on Microsoft Dynamics and Temenos because we think and we truly believe that on those systems we have a technology advantage compared to competition. We have already more than 2,000 customers worldwide on Lasernet, and together with Autoform that we got with the acquisition of EFS, we're making this bundle even stronger as a product offering for our customer base and for our partners with that customer base. And the ERP market, I mentioned the growth of the content services market. The ERP market is growing in similar numbers, around 10% a year according to Gartner, and it will reach about $50 billion in 2024. But more importantly, it's an ongoing SaaS transition here, and that suits us perfectly with our offering. So, what will happen in 2021? We will increase capacity. We will have even better support for our partners, making sure that we really get in to all the deals that are out there. We will be focusing on winning on Microsoft and Temenos, as already said. And these investments in growth, they will have a negative impact on our EBIT margin in 2021. Of course they will. We will, in parallel with this, of course, continue with our excellent delivery and excellent customer engagement with both our customers in private and public sector. And we see growth potential in the digitalization journey of the public sector as well as the private sector. That leads me in to the new financial targets that we published this morning. We will grow with an annual average growth rate of 10% from 2021 to 2025. We will, at 2025, have 70% of our total revenue as recurring revenue. Already pointed out, we will take a hit on the margin in 2021, but we will bring that margin back up again gradually over the years up to 2025, where we will exceed 20% EBIT margin. Remember that I told you before, we have done this before. We know the scalability of software and in a recurring revenue. That is what we will do. So we will invest in capacity, we'll bring up the recurring revenue, and that will then take us to gradually to better and better margins, reaching to the about 20% in 2025. The board wants to continue with paying dividend to our shareholders and has now agreed are now publishing that we are keeping the dividend policy, or actually altering slightly to be above 50% of our net profit should be paid out as dividend over time. That's of course a decision for the AGM and the shareholder at those times, but that is the policy that we want to stick to. So, in summary, we have a strong track record of delivering on and executing on the strategy. Now we're changing strategy slightly, going for more growth, less focus on margin. We will deliver and execute on that strategy as well. We have a balanced customer base in public sector and private sector. We have a market-leading position in content services with a good expected growth the coming years. We have the partnership with Microsoft, and we have the partnership with Temenos that will pave the way for us in this growth journey. There will be negative impact on the margins in 2021. But we see significant sales potential and market demand for Lasernet and Autoform in the market. And we will benefit from the transition from traditional license to SaaS in the market. That was it from me. I hope Fredrik has received a lot of good questions from the audience here. Thank you.
Thank you, Christian. I would like to start with the question regarding the fourth quarter. As you mentioned, the ACV was quite strong, excluding FX. Could you comment a bit about the sources of the strong number? Did EFS play a role, or was it mainly because of a strong market?
EFS definitely played a role in that. The capacity we have got with and the competence we got in with the acquisition of EFS has definitely contributed to that. But also the market is not slowing down as you could have expected in the pandemic situation. And it's also us doing a good job, I believe. So I wouldn't point at one specific reason for having a strong Q4. Q4 should be a strong quarter as well. Normally it is, and this year it was. So a number of parameters, I would say, or reasons. Better capacity, good market conditions, and us being able to convert the deals.
Okay, now it's time for a question from the web. And the question is, could we get some ballpark figures on how many employees you want to recruit?
Yeah, recruiting talent is never easy. We see that it might be more achievable in the pandemic situation, where other companies might struggle, and that might free up really good competence in the market. But we for a 12 to 18 months period, I would say that we want to increase capacity significantly. It could be 30, 40 people that we want to add to our team. Of course, gradually, depending on how successful we are in recruiting and finding those people and onboarding those people. But it is a hefty investment we're seeing in increased capacity to drive this growth.
Okay, I suppose that the bulk of the recruitment will be connected to Lasernet. Could you give us some rounded number regarding how much your resources in Lasernet will increase due to your planned hiring?
Well, yeah, I mean, first of all, we increased the resource, the capacity quite substantially with the acquisition of EFS and gained a lot of competence from that acquisition and capacity. But I would say that, yeah, the majority of what we're focusing here in the recruitment I'm mentioning for over the coming year and a half, yeah, it is around Lasernet, but it is also in other areas to support the growth of public sector as well. So there are recruitments in all parts of our business and growth plans for all parts of our business. But the majority is definitely on Lasernet. And if you're referring to what we're coming from, yeah, of course, significantly lower capacities, especially if you take away also the capacity we added with the EFS acquisition. So we're coming from, yeah, it will be over a 2.5 year period, perhaps a triple of capacity to support the partner network.
Okay, we got another question from the web. Your financial targets also partly include M&A. What types of acquisitions would you like to do?
Yeah, that would be bolt-on acquisition to support this growth journey. Of course, that should be something that drives a real synergy for us. It should be, for example, a customer base that we can address our already current products to, or vice versa, a product that fits perfectly into our offering on our existing customer base. To put it simply, those would be the main reason for an acquisition for us. And you could also see an acquisition as a recruitment of capacity, of course, which the EFS acquisition had partly was, even though it was also a product. So those are the different sort of acquisition targets that we could go for. But I would like to point out that the financial targets are the long-term targets. They're mainly driven by organic growth. We will be driving organic growth to a large extent, even though we will always want to add on suitable acquisitions to this.
Okay, we got another web question. You mentioned that margins will be hurt in 2021. Due to your initiatives. Could we see a negative EBITDA margin in private?
Private, that's dependent on. I haven't actually made that calculation myself. I would say that it will, depending on how successful we are with recruiting and finding talent and onboarding that, the more successful, the bigger hurt in 2021, I would say, and the swifter payback in terms of growth in the coming years. But yeah, if we're really successful, I would say that at least Lasernet, which is not our most profitable product at the moment, will probably be on red numbers in 2021 if we're succeeding really well. But we bear in mind that we still have 75 million in recurring revenue already on Lasernet going into the year. So we have a buffer of revenue in that with that business model we're having, but the investments we're going for will push the margins downwards significantly. Yeah.
Okay. So if I kind of ask quite the same question, but regarding the group level, you expect a negative impact during this year. I mean, is that 3% or 6% or even more on the EBIT group margin level? I mean, could you give us some approximation on how much decline you should expect?
Yeah. I mean, that we have a plan, of course, and I will not give you a forecast on 2021. And also, we're not doing this for one single year. We're looking on finding the right resources, the right competence, the scale this business in a controlled way, and that's operations. But if we're very successful with that, 3 to 5% percentage units from the current EBIT level, that would be success. If it's but more than that, I would borderline say it's naive that we will find that and be able to onboard that much cost in an efficient way. So somewhere along that line, I would assume, depending on all other parameters in our P&L, of course, as well.
Okay. Your new target is to grow 10% annually on average until 2025. Assuming a 5% growth rate in every product except for Lasernet, you will need to grow by 30% approximately in Lasernet. Is that a reasonable breakdown of your target?
Well, I haven't done that exercise specifically either, but it seems like a reasonable breakdown. But I think we have better growth than 5% of some of the other products as well, and perhaps we actually have a churn on some legacy products. So it will be in the total product mix, but it's not unrealistic calculation top of my head from what you're mentioning.
Okay. We got another question from the web. What type of employees would you like to recruit? Senior or junior, or perhaps a combination of both?
It will definitely be a combination of both, but we really like to have people coming in and then have the ability to grow within Formpipe. But it needs to be a blend of it. Some roles needs to be populated with experience. While we really like to revitalize and make sure that we stay young and hungry as well. So it will be a blend of that, for sure.
Okay. One more question from the web. Could you please elaborate a bit more on your ambitions for recruitment and functions throughout 2021 in private and public respectively, if you may?
Well, yeah, it's sort of all over the business, driving growth and helping our partners to deliver our product. That requires both help with sales and pre-sales, technical pre-sales. It also requires help with planning the delivery of it and making sure that the partner can be trained and execute on the delivery of the product. And then it will come to a support phase. And of course, we need backup support and technical support for the end customer and also for the partner in the third line if the partner take the first and second line support. So it will actually be spread both delivery capacity, support capacity, pre-sales and tech capacity, and sales capacity, as well as we are continuing to develop the product in order to be simpler to install, simpler to upgrade and deploy in also in bigger organizations. So it's a matter of scalability in the product as well. So all of the competencies is required. So we're growing all over the private sector organization or business area in terms of that, in terms of competences. And the growth, even though slightly more modest in the public sector, will also come from increased presence at mainly the existing customer base and driving the existing customer base to the next level of digitalization. So it is capacity to be closer to the customer-facing staff and competence.
Okay, another question from the web. You highlight the US as an attractive market for Lasernet. Is that because of Microsoft's position in that market? Any other interesting markets that you see?
Yes, it's definitely due to Lasernet's or Microsoft's position on the US market for Dynamics. Dynamics in the US is gaining more market share than Dynamics is doing in Europe. So the growth of Microsoft Dynamics is greater in US than it is in Europe, and Microsoft Dynamics is really successful in the US market. So it is to support the Dynamics partners we have in the US, but we also see that Temenos has a big investment in the US market, meaning that they're also crossing the ocean in order to go for US. We want to tag along with Temenos on the US market. Since we are doing that with Dynamics, we want to do it and go for that growth journey as well. So,
okay. Lasernet's global markets is of course interesting, but global markets also mean global competition. How strong is Lasernet compared to its competitors?
Yeah, for sure. There's many competitors. Can't argue about that. And perhaps the main competitor is not other software. It's actually system integrators trying to code what our software can do out of the box, much more cost efficient for the end customer and for the system integrator to run a successful project at the end customer. So that is probably the biggest competition we have. That is consultancy hours that we're building directly on the platforms instead of having a supporting software for document management. But there are document management competitors. When it comes to Microsoft Dynamics and Temenos, I'm not humble. We believe that we have cutting edge here. We believe that we actually have technology advantage to our competitors, even globally. We believe that if we get the lead, we're able to present and come in the door at the end customer, we will get the deal. So this is about lead generation and be able to prove what we can do. Then Lasernet will win because we think that the value that Lasernet provides in a ERP project and an ERP installation is the ROI for the customer is obvious. So that's where we see that we have an advantage compared to competition.
Okay. You target an EBIT margin of above 20% in 2025. Is that mainly driven by growth and improved margin in Lasernet, or do you expect increase in margins in your other units as well?
All over the group. We will continue to grow, and we will grow profitable with profits, increasing profits margins all over the group. What we're doing is that we're bringing it down due to that we're scaling up, and then the scalability of recurring revenue will gradually take us to the better margins. And we've done that before, and we see that we can execute on it again.
Okay. You disclosed some interesting data on Lasernet, which I really appreciate. However, going forward, could we expect some additional SaaS-related metrics, such as churn, net revenue retention, etc.?
That's definitely our ambition from the Q1 report and onwards. Not today, but we intend to be transparent with churn numbers on SaaS and also on maintenance actually. So with the entire recurring revenue contract stock, we want to be very clear and transparent with the stock market, what's happening and what's going on. And then we have not yet decided on which level of product detail we will break that down. But we will definitely want to have gross accounting on ACV, showing what is new sales and what is actually churn, for sure. Yeah.
Okay, interesting. I think that most people are familiar with Microsoft Dynamics in some way, but what about Temenos? Can you tell us a bit more about them? How strong is their position in the market?
Yeah. I mean, they're an upcoming player. It's still a big company. I think they're about 8,000 employees worldwide or something like that. I think they are number 3 or 4 on banking and finance system, depending on which report you read. And they're growing, and they have a go on the SaaS transformation as well. We have a long-term relationship with them via EFS. As you know, and as I pointed out, EFS has been a partner with us since decades, and EFS has a really close relationship with Temenos. EFS is now Formpipe, and thereby we come under the skin of Temenos even closer, and wants to tag along on that. But they're a modern, upcoming software vendor in the bank and finance industry.
Okay, thanks a lot, Christian. That was all questions from me and from the web, so I'll leave over to you for any concluding remarks.
To me? Yeah, and no, I think unless there's no other questions, I'm happy with this. Super excited about the new year, of course, and yeah, that's about it.